Hey traders, it's Greg from Trade90X. Hope everyone had a profitable week, and I'm always excited to do these weekend reviews to kind of, see, what we did well, what we need work on, and, how we get the game plan. Listen, it's always about making money. And if you've been watching me, whether I'm doing pre-markets, post-markets, weekend, monthly reviews, I am a stickler for process. If you want to have success, you've got to be a stickler for process like myself. Now, if you have any questions, hit us up at hello@trade90x.com. Remember, when you sign up at Trade90X, you should receive your free Trade90X journal and checklist, and there'll be a lot of other free stuff coming, so pay attention. Also, take advantage while it lasts. If you go to the Trade90X Instagram page profile, you can sign up for a 15-minute free call and ask us anything about trading. So take advantage of it while it lasts. And again, also pay attention, hit up our Trade90X YouTube channel. A lot of other free stuff coming in 2024. Now, in order to have success, again, this is only from us speaking here at Trade90X, you've got to have a strategy that's simple, replicable, repeatable, and that gives you a statistical edge. Otherwise, why are you trading it? Now, our strategy that does that is we call that the earn the right to trade live process. And I go through it every morning, every weekend. And that includes education, back testing, support, and accountability. And again, that support and accountability is what's going to stand out. If you want to learn how to make money, then you've come to the right place. Again, if you never want to be broke again and you want to start making money, then start listening to what we're doing here every day, every weekend, because again, we use trading as a means to help us fund not only our lifestyle, but our retirement and any other alternative. And I'm going to have some other videos coming out on kind of our true wealth plan as well for 2024. All right. Now, again, this right here is our trade plan, one page. If your trade plan is more than a page, then it's probably way too complex. Now, a big part of our trade plan is also our routines. Okay. Now, we're here on the East Coast. We trade the New York session. And again, every day we're coming in 7 o'clock to 8 o'clock to do our pre-market, build our plan. Typical hours we like to trade are between 8 and 12, where the most volume and volatility is. Now, you may find the afternoon is best for you. And again, when you're part of the Earn the Right to Trade Live process, we'll break that down for you. We'll see what's best for you. Okay. It's not one size fits all. Now, again, live market is our 8 to 12. And then post market is where we journal and review, rinse and repeat. And again, there is no shortcuts. Now, I have a pre-market routine that I usually like to do between 6 and 7. And that's what I call kind of getting my mindset right. This is where I'll do things like cold baths, cold showers, meditation, quick exercise, drink a lot of water. And what that does for me is it helps me get my mind right for, kind of what I look at it as a sporting event or battle. Again, and if your mindset's not right, what I tell anybody in the community, just pass, do not trade. You know why? It's just going to end poorly. All right. So again, this is our trade plan. I go through it every pre-market every weekend, and we break it down. So again, before we get started, always I say the same thing. Please always discuss with your financial advisor account about risking capital, and please make sure you have 6 to 12 months of emergency funds before you risk any capital. And again, don't be shy. Hit us up at hello@trade90x.com if you have questions. I'm here to help you achieve your goals. Okay, that's the most important thing. All right, let's go check out the information, and then let's go see how we're going to make money for the upcoming week. So the first thing we're always going to do, again, is I'm going to check the news and earnings. And as again, if you've been watching me, you know already that we do not trade into news. And if you're new, welcome. What news and earnings are for us is our hope is that it basically moves price quickly to one of our A setups within a bullish, bearish, or range market. As again, all I care about and the most important things that we teach our community is to keep it simple. What does that mean? That means that is your strategy proven to have an edge over a body of work like a casino? Check. Do you know your numbers? Check. I'll tell you those in a second. 3, do I know and have I mastered what a bullish bearish range market context looks like? Have I mastered the A high probability setups within a bullish bearish range context? And do I understand when price has no price edge, choppy price edge, and when to sit on hands and be patient? Yes or no? And then, of course, mastering the journal and review process. Now, our numbers, again, I can only speak for us here at Trade90X. When we talk about active trading, we don't risk more than 0.5 to 2% of our capital per trade. We don't risk more than 3 to 5% of our capital per session. We focus on a minimum of 2-to-1 risk reward to target one, and we have a defined profit and loss goal every day, whether we win, lose, or draw. If we hit those numbers, we shut down the computer and move to the review process. And we do this because this is going to give you capital preservation. Again, I see way too many people who have no understanding of risk and money management numbers. All I'm going to tell you, as somebody who's been building businesses for 20 plus years, you don't know your numbers, you are going to fail. There is no way you can scale up your business or your trading business if you do not know your numbers. So whether it's Trade90X or if you're speaking or looking at anybody else's strategies, if it doesn't talk about numbers, okay, and a plan on how you can prove that strategy, then why are you wasting your time? Okay, stop wasting time. And again, if you want to make money, keep it simple. And we're here at Trade90X. We do that again every day, every weekend. And again, as you jump in, I'm going to be doing more stuff that also allows you to understand how we then take monies and profits once we prove ourselves, and then we put them into other vehicles like retirement or other alternative investments, which, again, those are just as important to understand as actually your trade plan as well. All right. So again, what we're going to look at first is news and earnings. Again, we've got a pretty busy week next week, starting not Monday, but Tuesday, Wednesday, Thursday, Friday. We've got a lot of information. You got FOMC stuff. And again, just pay attention. It's all right here. I show you the goods. Okay. Here at Trade90X, we don't hold back. I show you the goods every day. I show you the strategies. I give you our risk and money management. I give it to you all. Okay. Then it's up to you to decide, am I going to ask questions? Am I going to join the community to take it a step further? That's up to you. But again, all I can do is lead the horse to water. I can't make you drink it. All right. So next, earnings. So earningswhisper.com. Let's go right here. Now, again, whether you trade stocks or not, again, of course, if you have stocks, always be aware of the ones that are coming out. But most importantly, again, remember, the only things that can change the personality of the markets are, number one, news, earnings, or again, of course, if somebody like the president or Elon Musk comes out with some crazy tweets and stuff. But most part, news and earnings. So again, we got a busy week of news again this week. We've got a lot of important companies. So just pay attention, understand which ones are coming out before the market while we're doing our plan, and which one of those and again, you can just see, just standing out right away, you see Amazon right there. So, but we got a lot more important companies. So just be aware. Again, all this information is free. I go through it every single day. Again, it's always about the right information, where to find it, and then how to package it. And we do that into every day's plan. All right, next, fear and greed index. And again, this data is the stuff that we feel is most important. Again, all I care about every day, number one, who has control? Is it the bulls, bears, or are we in range, kind of indecision price action? And do I understand the setups? And if I do, and I have confirmation, it fits my risk of money profile, I'm willing to accept the risk, manage the trading journal. And that's all I care about every day. That's my focus, whether I'm scalping, day, or swing trading, it does not matter. And the faster you understand the rules of engagement, and I do it every single day, every weekend, then it's up to you to ask questions. Okay, barchart.com, go to stocks, market momentum. And what I'm looking for here is based on the 50-day moving average. Every stock, you can see the momentum is kind of still been, more short-term bearish. FinViz, again, love this tool. We can see that Friday, all the indices had we closed the day bullish. You can see the heat map, definitely the Mag 7, the top tech stocks really carried us, which is good and bad. And again, we can see Apple was kind of weak. We really like to see more of a breadth of the market to have a stronger market. All right, tradingsteer.com. Okay. Now, FinViz also, let me just go here. Again, what I'm looking for is, again, I talk about this every day. The most important things to me are the S&P and the indices, and then the sectors. Okay, the more confluence we have that show that we're bullish, bearish, gives me more confidence. And again, here, 1 year, half year, 3 month, that's your main trend. We are bullish. Now, your short-term trend, the weekly and daily, now one day doesn't make a trend, the weekly is bullish, but the monthly is definitely still bearish. So what I really like to see when especially like if I'm swing trading, I want to see the 1 month, 1 week, and 1 day green if I'm bullish. If it's bearish, I want to see it red. And if I'm seeing a lot of red green in this short-term area, then I'm just going to focus on my day and scalp trades. No reason to push it. Again, I want to trade the power of the market. Okay, and this is what we're trying to accomplish with the information. Okay, commitment of trader. This comes out only Friday. Okay, it's very important because the commitment of trader is your smart money and the most important symbols that control the market. The smart money is your banks, institutions, hedge funds, and they control 85% of the order flow in every one of these symbols. Now, we focus on mostly the indices and the S&P. And again, I don't really give a crap what someone tells you on YouTube or on CNBC. Learn the facts. I work off facts, not fiction, and I give you the information. This is telling you right here that the smart money that controls things, that 81% versus 18% is still bullish. So what that's telling us is, it's not telling us day to day, but it's telling us in the bigger picture. So until I see a personality change in the bigger picture, right now the bulls are basically saying that, the bias in the long term is still bullish and dips are still to be bought. And so that's why I love looking at this tool week to week. All right, stockcharts.com. Okay, now I love their predefined groups. And let me just update this one. All right, and I'm going to add Apple here. And what I love about this tool right here is I can quickly, with a click of a button, show you the main trend versus the short-term trend. And again, I don't care what type of trader you are, you need to understand the main trend versus short-term trend. Okay, now all I care about, whether it's the main trend or short-term trend, we bullish, bearish range, or we have just no edge, can't figure it out. Bullish is lower left to upper right. I talk about this every day. Bearish is upper left to lower right. Ranges equal highs, equal lows. Now, in bullish and bearish momentum, I don't care if you're trading a 1 minute, 5 minute, up to a weekly and monthly. We look for those clear momentum legs into momentum pullback. Those clear momentum pullback, momentum into pullback and pause. Those pullback and pauses, whether you're trading a 1, 5, 15, 60-minute, weekly, monthly, that's where we find our trades in bullish or bearish momentum price action. Now, in range price action, same thing. I don't care if you're trading a 1 minute, 5 minute, 15 minute, 60-minute, weekly, monthly. The ranges are equal highs, equal lows. We don't want to trade the middle of a range. Okay, middle of the range is where you very low probability. The highest probability areas in a range are if you get bottom third bullish rejection, top third bearish rejection. We look for those fade trades in a range if that's part of your trade plan. Okay, and we play the range until it can break back to bullish or bearish momentum. Okay, now here is the Dow, S&P, NASDAQ, NYA, and Russell. We trade all those. The indices for us are the most important things, and we can see in the big picture, they are still moving lower left, upper right. They've had a pullback, but I don't see, lower highs, lower lows yet. All right. Now, the other thing that we look at that's very important in the long term and short term is your VIX, 10-year, and the dollar. Now, the VIX is the most important, the volatility and sentiment. Now, if these are all moving with bullish momentum, that's bearish for markets. If these are all moving with obvious bearish momentum, that's bullish for markets. If they're in a range, it tells us indecision. Now, I do see the 10-year and the dollar moving up, but the VIX has kind of been in a range, and now more, it looks like it's coming down. And then, of course, I have Apple here, which is kind of in a range at the bottom of the range. And then I always look at the commodities, DBC, ETF, gold, USO, and we can see those have more of a bull bias. But again, what we really want to look at is I'm looking at the indices and really the VIX. Those are those four indices and the VIX are the most important to me. And then I go short term. And again, remember, we are active traders. That's what we're talking about. So that's for your swing, scalp, or day trade. Then we can look at the short term. Remember, now, all I care about, this is what you need to master. Are we bullish, bearish, or range, or are we in no edge price action? Well, it looks like right now we were bearish in the Dow, S&P, NASDAQ, NYA, Russell, and now every one of them has got a reversal bounce. We're kind of getting now this kind of double bottom support, but now what we're looking for, and again, we'll go to the charts and see if we can see something, but we're now looking for that next phase, that momentum into pullback and pause, or is this just going to be another leg where we just kind of moved up and now we moved down? So right now we don't have enough information, but definitely what I like is we're seeing all the indices kind of put in some support. So we will pay attention. Now, let's see what the odds enhancers are doing. Now, again, most importantly, 10-year dollar and the VIX. The VIX, as I told you, is the most important. It is moving down. Okay, so we'll keep an eye on that with the 10-year and the dollar. Now, do you see what I was talking about before? The clear momentum into pullback and pause. Look how clear the commodities are. Look at this, lower left to upper right. Look how clear that is. Momentum into pullback and pause. That's what I'm talking about. The clearer you get with those momentum pullback and pauses in a bullish or bearish marketplace, like look at this, look at gold, momentum into pullback and pause. Now momentum, now again, we'll look to see it did gap down, but we'll see it's still giving us that bullish upper left to lower right. So the clearer that is, again, and when you're part of the Earn the Right to Trade Live, this is what we focus on. Most of our focus is, I don't care what type of time frame you're trading, are we bullish, bearish, range, and what does that look like? And then how do we master those setups within the bullish, bearish range, and then using proper risk and money management, good entry, stop, target techniques. This is what we master. I don't need anything else. And if you're going to waste your time with a bunch of other nonsense, and again, so let's recap what I do. Every day, I'm looking at the news and earnings. I just want to make sure there's nothing that have a personality. Number two, I'm looking at the data. Okay, I'm looking at the smart money data to figure out, are we bullish, bearish, or range? Then the most important thing is every day, we're looking at the long-term versus short-term. And again, we trade a lot of these symbols. And the reason I trade a lot of these symbols that you're looking at is number one, these also are the best symbols for market context. I don't want to just trade flavor of the day symbols. I leave that to somebody else. I stay focused. Now, we mostly focus on futures and we trade options. Okay. And that you'll find out when you're part of the Earn the Right to Trade Live, which suits you better. Do both suit you, or that? All right. So right now, what we're seeing is the long term is definitely still bullish. Short term, we don't know enough yet. We're starting to get a bounce, but we'll see. Okay, the VIX coming down is definitely helpful. Now we need to see some more follow through. All right. Now, one other thing also that I have one or two other odds enhancers I like to look at. So here on the weekends, I like to look at the ES Dow, NASDAQ Dow, and then I have the US dollar VIX. And then here, as I showed you before, based on the 50-day moving average, I put a chart together where here is the 200-day average, the 50, and the 20. So what I'm looking for is, this kind of gives me an odds enhancer. If I see the dollar and the VIX, are they going up? Are they going down? Well, the VIX is still kind of, down. And so, as I mentioned, if the VIX is moving down, that could be good for markets. Now, I don't care. These are just odds enhancers. When you look at the charts, I have the 4-hour chart on. This is a little bit longer term. If I don't see a setup, then there is nothing to talk about. Now, we're starting to see some bullish bounces here. Okay, so I have a momentum band and the 50 moving average. So again, if we get above that, then we definitely have the potential to move back to these highs. Now, let me show you how I use these. So I have these extreme bands, and let me just show you the 50-day. This goes back 20 years. So the way that I like to use this is when price is moving down into anywhere this 4 to 25 area, there's a potential from going from bullish to potential bearish. So say I'm in a trade, a swing trade, I would start lightening up my trades and either just get out, or I leave a small runner and take out a big percentage of profit. If price is moving up and I start seeing this area high, high 70s into 90s, then I'm going to potentially also lighten up my load, and I'm going to take some profit, maybe leave a runner. So what this tells me is just to pay attention. Now, when I've got all three in these extreme areas, and then we could match it up with the charts above and see trades, then that's the ideal. But again, what I use it for is really, I want to see, do we have this, extreme at the top that tells me, hey, potential start maybe, looking for a reversal, or are we down at the bottom looking for a bullish reversal? So these are just a great odds enhancer chart that I like to use. And then also at the at the end of the week, I like to look at correlations. So here is the SPY against the bonds, and SPY is sitting here more bullish. I have the total stock market VTI, which is one of our go-to symbols for retirement accounts. You can see we've had the pullback and we're not making those higher highs yet. Here is the SPY against interest rates. Here is the SPY against the 10-year, again, right here. Here is growth versus value. And again, it's VUG is growth, VTV is value. And again, VUG is the lead symbol. So again, moving lower left to upper right is bullish, upper left to lower right is bearish, and sideways in a range. And right now, we had growth was bullish, it's pulled back, and now it's trying to continue on. We'll see what happens. Also, I have the staples versus consumer. So the consumer is the lead. Remember, we are a 70% consumer society. So when we see that consumer XLY bullish, that is bullish for the markets. When we see LXP, when we're starting to move bearish, that means we're becoming more defensive. Okay, and then of course I have the SPY against the VIX, and then SPY against the dollar. And these are all for us. These are things that I look at, weekly and monthly, along with this other information. So now that we've got the information, let's go to the charts and let's get to the most important part. Let's see what happened this week and how we're going to make money this week. So again, let me just do the top-down approach. Now, what I like to start with, I start with the monthly. The monthly is going to be your main trend, and I always match that up with the commitment of trader report. So right now, all I care about, I don't care if I'm looking at a 1 minute, 5 minute, weekly, monthly. Are we bullish, bearish in a range? And I have a momentum bar, this momentum band right here. So when we're bullish, I want to see that sloping up. If we're bearish, I want to see it sloping down. And it's just a nice odds enhancer. I'm a visual trader. And then if it's sideways, you'll see it sideways. And then I have a line chart. Now this box right here, it's just another odds enhancer. It kind of breaks up ranges for me. But the most important thing is the line chart and the momentum band. And what I'm looking for is for obvious bullish and bearish momentum. So bullish is lower left, upper right. Bearish is upper left to lower right. Range is equal high, equal low. And when I'm bullish, what I'm looking at here is the clear momentum pullback at or above the band. If I'm bearish, I'm looking at the band being down. I'm looking for those pullbacks at or below. Once I see the at or above or at or below, I then move to the candles, and I can see this bullish engulfing candle closing above. Now, what I look for bullish momentum, The more obvious, the higher the probability. You'll learn in the Earn the Right to Trade Live process, whether it's a 1 minute or monthly. I like bullish engulfings and pin bars at or above, or dojis into those pin bars and engulfings. If I'm bearish, I'm looking for those, momentum to pull back at or below. And then if we move to candles, I'm looking for engulfing candles, shooting star, the opposite of a pin bar with the wick on top, and then dojis into those two candles. And if it's not, I'm not interested. So the monthly is matching up and we're still bullish. It's just a short-term pullback. Now, one of the other things also that I like to look at is how do the daily, weekly candles and monthly candles. Now we're coming up on the end of the month, early Monday or Tuesday, so we'll see how that candle closes. Now the weekly candle just closed, and it's kind of a piercing candle. We're closing it near the top part, so this could go either way. So let's go to the line chart. Now again, my job is whatever time frame I'm looking at, are we bullish, bearish, or range, or we have no edge yet? And then my job is to basically, regardless of whatever time frame, is to then set up the chart. So then I look here, I can see that we had the engulfing candle engulfing into a pin bar. So if you were trading the weekly chart, these were the two most important trades. We're bullish, the band's moving up, we're moving lower left, upper right. So now if I was trading the weekly chart, I'm waiting for this. I'm either getting a rejection, lower high, lower low to move down, or we start moving back, higher highs, higher lows. We look for those momentum into pullback and pauses. And this is how you break down. I don't care if this is S&P, Apple, crypto, penny stock. I do not care. This is how you trade it. Monthly and above is your main trend. Anything below that is going to be your intermediary trend. All right. So the charts, the way that we do it, are black and white. So now here's your daily chart. Just remember, your job is to determine bullish, bearish, range, or indecision. And right now we can see we had this big, strong lower left, upper right. We did have a break and retest pullback right here. Okay, so that was a definite opportunity. And now, as you can see, we might be starting back up, but let's put on the candles. We can see we had an engulfing right here. So that was definitely a trade right there. Now we don't know yet. Okay, now this is definitely starting to look, because we have multiple dojis. So if we get that pullback above the band then I'm going to be looking long. But if we do this and fail and come back down, then we'll be looking at this. And again, remember, your job is to master what bullish, bearish, range price action looks like, what the setups are within a bullish, bearish, or range are. You learn all that with us. We go through it every day. And again, when we have indecision on the time frame, we do not trade it. Now, if you want to go down to a smaller time frame, 4 hour, there we go. So let's put on the line chart. And there we go. So we can see so for me, I'm looking at those momentum legs. So for me, this is a momentum leg. For me, this is where we started. Higher highs. And this is what I'm looking for. Now, let's put on the candle. Let's see if we closed at or above. All right. So this candle right here. So for me right now, if we break above this right here, we could have a trade right here. If we get a bullish candle, we definitely could have a trade with a move back to the top. So definitely looking like a possibility based on the 4 hour. All right, let's go back here. Now let's get to the good stuff. All right. So if you've been watching me every day, I do this every day. The 15 to 30 or 60 minute or faster swing trading chart and It's the anchor chart for our day and scalp trades. Now, the way that we do this every day came from you guys. You guys came to me and said, hey, Greg, I love your stuff, but is there a way to do a one chart strategy where we can quickly look at 1, 5, or 10 symbols, you know, in the pre-market, post-market, weekends, to really evaluate, number one, do we have a bullish, bearish kind of range or no price action trade? So I came up with what's called the Trade90X, earn the right to trade live one chart strategy. I do it every morning. I do it every weekend. Hopefully by now you're getting it. I give you the $1 million goods. I give you the full strategy. I give you a risk and money managed number. I give it to you. I give you the tools. I give you the steps. I give you the setups. Let's go through it right now. And then I'm going to go through, because it's the weekend, I go through a little bit more detail. All right, so let's go through the tools. Any good strategy needs a set of tools that are predictive, not lagging. These tools are predictive, not lagging. They're here when we come in. They're not here after the fact, okay? And what these tools allow us to do is they can be used as entry, stop, and targets. And the most important part that gives us an edge over 99% of other traders, the tools tell us, are we bullish momentum, bearish momentum, or do we have range, price action, or no edge? All right, so let's talk about the tools. It's the previous day's high, the previous year. This is the yearly high low in gray. This is the open and the yearly open in blue. I've got the monthly high low in orange, the weekly high low in purple, and then I use the previous day's range as our short-term bias. The previous day's high, midpoint, low. This is the previous day's close right here. And then the blue line, this aqua, is the open. And then these two red lines above and below, these are just potential expansions for the previous day's range. All right. So now you know what the tools are. Let's go and discuss what the setups are. So the beautiful thing about this is now the yellow line is where the week starts. Okay. Now let's discuss what these, let's put it together, and then we'll put together the full strategy. So what I'm looking for is the following. If price is not obvious, I have no interest. Okay, I have no interest. Let me start with this. When you have choppy, no edge price action, and again, when you're part of the earn the right to trade live process, you're going to back test and replay hundreds and hundreds of charts until you master. Again, with the tools, you're going to master, number one, what bullish momentum is, bearish momentum, range price action, no edge price action, and you're going to master the strategy. And by going through the charts, you're going to understand. You see all this? This is what I'm talking about. When you have no edge price action, we have no interest. What we're looking for every day, you see these movements, these big momentum legs, this is how you make money. This is how you make money. This is how you make money. Momentum into either continuation or rejection is all we care about, and we use our tools. You'll hear me talk about that all. Again, I want momentum either into rejection or continuation, and the tools quickly tell us, do we have the bullish momentum trades to look at, bearish momentum, or range trades, or no edge? All right, so again, these no edge right here, sideways chop, that's where you go to lose your money. Now, again, we're doing this Saturday morning. This was Friday. So again, the tools tell us what type of day it was, everything. So let's go through the setups now. The setups are clear. When we are above the previous day's range, I want clear higher highs, higher lows, because those clear higher highs, higher lows, like I showed you when we were looking at gold or the commodities ETF, that's how you make money. When you're not sure, that's when you lose money. And those momentum and pullback in bullish and bearish momentum give us the opportunity to set up, and then the tools tell us when we have the strongest bullish and bearish momentum. There we go. This is bearish momentum, lower high, lower low, momentum into pullback. Now, again, the tools tell us that we have bullish momentum, bearish momentum. Okay. Now, We also tells us, the price tells us when we have no edge and we're just sitting on hands until we have a bullish momentum, bearish momentum, or range step. Now, remember ranges, bottom, middle, top. The middle is the least favorite for me to trade. What I'm looking for in ranges, remember, ranges tell you that buyers and sellers agree on price. Okay, so you want to play the range until price can prove back to bullish bearish momentum. Now, one thing about ranges, the wider the range, the more opportunity to make money in a range. The tighter the range, that's when potential is for it to break out. Now, what do I look for in a range trade? I want to see strong momentum at the bottom third, rejection to go long back to the middle or top. I want to see strong, which we didn't get here on Friday. I want to see strong momentum, top third rejection to short back to the middle and bottom. I want to see strong momentum, fake out, breakout, where it looks like the sellers have it, not so quickly. Buyers come back, and price then comes in and break and retest back into the range. I look to the middle and top, and then the same thing, which we did not get on Friday, is strong momentum, break, retest, and then I'm looking down to the middle and bottom. And this was a pretty uneventful day based on the 15 minutes. So now you know the numbers. I've given you the numbers. I've given you the tools, and I've given you now the setups. Now, one other thing that's very important. When we break above the previous day's range, those weekly, monthly, and yearlies are extremely important targets. Now, if we have the weekly, monthly, yearly near or on top of the previous day's range high, like right now, you see the weekly right here, what I do is I just turn these into zones. Okay, these zones are very important. Okay. All right. Now you know the numbers. Now you know the tools. Now you know the setups. Now let's go through the 3-step earn the right to trade live process, one chart view, Trade90X, and you can trade any symbol with this. So the first step, number one, is the weekly. So what this does is this also helps you with your position, swing, day, or scalp trades. Again, first thing I'm going to do in the earn the right to trade live one chart view is I'm going to go to the weekly, kind of see that bigger trend, and we are moving lower left to upper right. I'm going to take the horizontal line in red, and I color code it red, and what I'm looking for, where has priced, where I see red and green candles, paused and left quickly, paused and left quickly, paused and left quickly, and I call these decision points. They only come from the monthly and weekly, and these are very important levels. I do not trade into them. Now they're on the chart. In step 2, I'm going to go anywhere from a 15-minute to 60. You'll decide what's best. I've been liking the 15-minute of late, and I squeeze the chart up, and you'll see that the decision points are in the chart. And then I'm looking at over the last few weeks, what has price been doing? Well, we were upper left to lower right. Now the buyers this week, we went from lower left to upper right. And then we use the tools. The tools are predictive, not lagging. They are going to help us determine what was going on. So remember, we came in, we're doing pre-market between 7 and 8. That's where we build our plan. Our live market is typically between 8 and 12. We do not trade into news. And then after we're done trading, we do our journal and review. But this was really telling us when we came in yesterday, we had just chop. Now, there was news yesterday at 8:30. So what I'm going to do is, yesterday was not a fantastic day. We kind of had a choppy day. We tried to break out. So let's go to now step number 3. I like to use anywhere between a 1 and 10 minute. 3 minutes seems to be my sweet spot. Now, again, remember, we're trading between 8 and 12. But what I do is whenever there's news, right here, it was 8:30. So let's put in the line right there. So when we came in yesterday, we identified it. Remember, this is what's such a beautiful thing about the tools. Ask the questions. Are we above the previous day's range for bullish momentum? When we came in, no, there was not. Were we below the previous day's range low for bullish momentum when we came in? No, we were inside the range day, and we were sitting in the top third with choppy, no edge price action. Here was the news. Again, what are my trades? Bullish momentum, obvious bearish momentum, above the previous day's range, below it. Range trades, what did I talk about? I want strong momentum rejections at the top third, bottom third, or fake out breakouts. Okay, so now what did we get? So for me, we had a range here, and we broke back up, and this was a nice trade right here because we didn't know it was going to go sideways, and we also had a nice target. So we went from an inside day break and retest, multiple rejections. Here was your setup right here, and then here was your target. Get above there. Now I like doing structured, meaning that longs and shorts. So my structure stop, I want to be below the most recent candles right here. I got to have a level, check. And then I'm looking at the next level. It wasn't quite 2-to-1. So that will be something that you have to decide in your Earn the Right to Trade Live when you're back testing a replay. Is that something that gives you a high probability? Now, I usually myself, I'd like to have space of at least 2-to-1. So this was a trade for me that was kind of not the highest probability. All right. And then you can see what happened is we kind of just, failed. And then again, we had another potential right there. But again, we're trading typically from here, right about 12 o'clock. Now, if you are someone that have back tested and you prefer the afternoon because that gives you an edge, then this would have been a nice trade. Price rejected. Again, we had the bullish momentum, pulled back and rejected with a pin bar, and that would have been a nice trade. So here were the two, really what I'm talking about, the A setups going with the trend. Now, again, I'm not going to get into the counter trend stuff like right here. And I always tell people right here, the counter trend stuff is reserved for people that have been seasoned professional traders in the Trade90X Earn the Right to Trade Live 1 strategy, and they have at least 6 to 12 months of proven consistency. Once you have consistency, have mastered the markets, then you can talk about counter trend. But the newer traders, I want you going with the power of the market until you can prove that consistency. Okay. So there were some setups yesterday, just not the greatest follow through, and that's trading sometimes. But again, identifying our process allowed us to understand what's going on. All right, let's go look at the other symbols that are key in which we look at, but we'll handle every asset class. So again, weekly on the NQ, we are still moving lower left to upper right. Where are the areas where price have now paused? Right down here. These are the two main ones right there. But we are still moving lower left, up right. Definitely short-term pullback, and we could still come back down here, but we don't know yet. All right, let's go to the 15-minute. Squeeze the chart up. We have our decision points in. What are the tools telling us? Well, we're moving lower left, upper right. Same thing. Buyers this week came in and are now moving, lower left to upper right. What are the tools telling us? When we came in yesterday, again, remember we had a weekly. So what I like to do is whenever I have a weekly, monthly, yearly, once we get above, if it's close by, I like to use this ray line and just make them in blue. Just something I like to do. You don't need to because they're already in front of you, but just something I like to do. Kind of color codes difference from the decision points and the shorter term. So again, looking at the 15-minute chart, you can see that we were kind of in this no edge, choppy price action. Let's go down to step number 3 so we can see more structure. Again, remember indices, we had news at 8:30. Okay, right here. So we had basically the same look and feel as the S&P. We had a nice trap low right here below. And we had nice break and retest right here. One try, and then you had doji, and there was your pin bar right there. And you had a nice target back up to the weekly. And again, what we didn't see, and this is what I was talking about, remember, if this was going to be the bullish momentum was really going to take, we would definitely have seen this. and we didn't. What we did see, and then we had basically a sideways range for the rest of the day after it hit target. But this was definitely the nice A setup right here. We had an inside one try, two try at the previous day's range, and then going to target one. And if we would have broken above there, we had some targets 1, 2, and 3 above. All right, perfect. Let's go to the Dow. Again, rinse and repeat. It's the same thing, no matter what symbol we look at. Again, let's take those off. What are we doing here? We're determining, are we bullish, bearish, or range? Well, look, we were bearish sideways. We are now bullish, but we have some short-term pullback. Where are the decision points? Here and here. And you can see we rejected right here. Let's go to the 15-minute, see what's happening. We see the decision points. Again, squeeze the chart, and we can see again the Dow, like the other indices, moved off the bottom, lower left, upper right, not as strong as the other two. And again, using the tools yesterday when we came in, we could see that, again, it's a range day. It wasn't above, it wasn't below the previous day's range. It was basically like the other indices, choppy side action in the middle of the range. Let's go to the 3-minute. And again, as mentioned, I don't like to trade. Let's put in 830. The middle for me is not my favorite trade. And again, and the reason I say that is because if I'm looking at 5 or 6 symbols, I'm going to focus on the symbol that has the most obvious bullish, bearish, or range price action. And again, bullish momentum above or below, and which one has the strongest momentum rejections at the top third, bottom third, fake out breakouts. And the middle trade, no, it's not. It's just not my favorite, just because the middle is so choppy. And the Dow really didn't give you anything fantastic yesterday. Let's go to the Russell. Again, same rinse and repeat. It doesn't matter what asset class, same steps. Step number 1, you go to the weekly. Hopefully you see what I'm seeing here. And again, once we see a range, we're going to squeeze it in, look at those equal highs, equal lows, and we're going to box the area. There we go. And if you see, remember, this is a weekly chart. This has been going on since 2022. And what do we do with ranges? Remember, I don't care if it's bullish, bearish momentum, or range. I don't care if you're trading a 1-minute, 60-minute, or weekly. What are the trades? Remember, this is over the last 2 years. Remember, momentum, strong rejection, top third, bottom third, fake out breakout. So if you were a larger time, you had a fake out breakout, and you had a rejection trade. So you have 2 opportunities here to trade, even as a longer term position trade here, because the weekly, monthly are usually charts that we use for position trading, things that we're going to trade for months and years. But this one gave you beautiful trades over the last 2 years. All right, let's go to the 15-minute, see if we can see, let's see if we can, let's move this right here a little bit. All right, so we know we've got the range, the bigger range. We're inside the bigger range. Now we squeeze the chart up, and we can see that we were bearish. Now we were bullish this week. Using the tools yesterday, what did it tell you? Well, it told you we were in a range day. We were in a sideways range day in the middle. Now let's go to the 3-minute chart. Again, same thing, 830. Right there. Now, here's what I'm going to say about the middle. I always tell people, if you want to trade the middle, here's the deal. Number 1, you better have back tested to prove it had an edge. The range better be wide enough from the middle to the top to be 2-to-1 to the top or bottom. You better have an incredibly strong, obvious, like there's I bring it up because this is a nice potential setup. I don't like to trade the middle. I prefer, like I said, there's always a trade with bullish momentum, bearish momentum, top third, bottom third. So I'm going to focus on that. But if it's something that you like to do and you have an edge, this multiple rejection, 1 try, 2 try, was a beauty right here. There was your entry, and you definitely had space up to the 2-to-1. Okay, so that was the Russell. The Russell closed inside day yesterday. All right. Let me see what the VIX was doing yesterday. Remember I talked about the VIX, long-term, short-term? So when the VIX is moving down with obvious price action from here, from right here, right after the news, the VIX went down. Now I always have a VIX chart up. This gave you an edge to tell you that the indices were definitely going to move up. When the VIX is moving up like that, that is bearish for markets, okay? I'm going to do a video just on that relationship where I have the S&P and the VIX, and I'm going to do just a video on that. All right, let's go to other symbols now. So let's go to bonds. Again, I don't care what the symbol you give me. It's the same strategy, steps. All right, so here are the bonds. This is a 30-year bond. So we're moving upper left to lower right. Where are the areas where price paused? Right here and here. These are the two most recent ones. Let's go to the 15-minute. We know it has a longer-term bearishness right now. Let's put in those decision points at these key levels. All right, so I have a monthly, yearly at the previous day's range low. And we've got a weekly here. So now what were the tools telling us? When we came in the 15-minute, we can see it's in a range. Now, one other thing also I also recommend, when you have obvious trend lines, even if it's above the range, below it, or inside it, definitely use them. And this basically was telling us that from Thursday into Friday, we had inside the range, the bulls were trying to take back control. But what doesn't change is our setups. Top third, bottom third, fake out breakouts until price can move back to bullish and bearish momentum. Let's go to the 3-minute. Again, now bonds open at 8:20, but we had news again at 8:30, so we don't trade before that. And before we came in, you can see price action was kind of in the middle, doing nothing. And again, this did not give us a top third, bottom third, fake out breakout, or bullish momentum trade. All right, let's go to oil. Again, I don't care what asset class, I don't care what symbol you throw at me. It's the exact same steps. And I hope you're getting this $1 million stuff by now. So weekly, here's your oil. Okay, so oil, we can see we're basically in a range, and the bulls have been bouncing off right here. And now we're getting into that top third. So what do we talk about? Bottom third. When we talk about ranges, bottom, middle, top. Fade at the edges until price can break out. So now what we're waiting for is oil to see, if you were a weekly trader, do we get something? Do we break out and make higher highs, higher lows? Or do we get that further rejection to short? We don't know yet. We'll pay attention and see what happens. All right, let's go down to step number 2 as active traders, and let's see what's happening. All right, so the tools, what are they telling us over the last few weeks? Told you we were bearish. Now we bounced off this, the monthly. And this week, the bulls have been, moving lower left to upper right. Coming in yesterday, you can see we're basically literally in a sideways range right at the previous day's high. Okay, let's put in 3 minutes so we get a little more structure. Now, remember, oil opens up at 9 o'clock. We did have news at 8:30. And so 9 o'clock, where is 9 o'clock? Okay, right there. So coming in, the overnight traders, tighten this up. They had a trade right here. They had a break and retest. Break and retest, momentum, 1 try, 2 try with a nice bullish. We went, like I said, a rejection of the previous day's high. You had targets right up here and here. So that was a beautiful trade for the overnight traders. And then when we came in, we had this reversal pattern right here at the top third. And then we came back down. So again, if you were one of our more seasoned traders and you wanted to take that, I wouldn't have a problem. Again, newer traders, we're not kind of trending. What we were looking for is another rejection of the previous day's high, or if we broke into the range, we were looking for this and we didn't get it. Okay. All right, let's go to gold. Again, we'll go to the weekly chart. Put this aside. There we go. So we can see that gold literally for the last 4 years had been in a range, and we had massive, remember what's a range? Bottom, middle, top. Fade at the edges, fake out breakouts. So the last trade right here was a beautiful bottom third rejection reversal right here. This was a trade, and then now we're breaking out. So here, let's put decision points. We have this red candle rejection and the green right here. So right now we're sitting in this range from about 23, let's just say 24.50. And again, what do we do with ranges? Top third, bottom thirds until it can break out or below. Let's put this here, right here. There we go. So we'll watch this now. We'll watch this area. So now we can play, go to the 15-minute. We know where the decision points are. We can use the shorter term tools. There we go. And now we use the previous day's range. We squeeze the chart up. We can see we were bearish. We were in a range. And then towards the end of the week, the bulls are trying to move, but it turned into a range day. And right here, we can see we're in the middle. And then we had what's called the fake out breakout. One try, two. Remember, if it's going to be bullish, it's going to move like this: higher highs, higher lows, lower highs, lower lows, like that. And when we get the fake out breakouts, this is a perfect example. Boom. All right, so let's go to the 3-minute. We'll see a little more structure. Now, gold, same thing. It opens at 8:20, but remember, we had news yesterday at 8:30, and there we go. So coming in, remember, we're there between 7 and 8 doing our pre-market. We can see that the buyers were trying, had a break and retest, and then failed. So we know in the short term, this area right here was the high of the overnight. So we put that in, and look what happens. We reject. Because remember, if it was going to be bullish continuation, okay, it would have done something like this. And we didn't get that. We got actually rejection. So here were your setups here. The break and retest, the engulfing, or break and retest, the other engulfing. Those were your two setups for gold. So gold gave you right here, remember, rejection area. And then remember, there's only very few trades. We have either bullish momentum, bearish momentum, momentum into top third or bottom third rejection, or fake out breakouts. And this is what we call the fake out breakout. It looks like the buyers had it and then they failed. And then we had the break and retest within either these two areas. And then remember, the targets from the middle, from the top is either 2-to-1, middle or bottom. From the bottom up is either 2-to-1, middle or top. And we definitely had a nice setup. And then look what happened here. We hit the open, and then price just went sideways. All right. Let's go to the euro. I'm going to do a few more, and then we'll get back to our weekend. But again, guys, I do this every day, every weekend. The weekend I take a little bit longer because I want to go through a lot more symbols. I want to make sure you get it. This is $1 million stuff. You can use this for anything. You can use this for position trading, swing trading, scalp and day trading. Again, it's not easy, but it's not difficult. It just takes repetition. All right, so here is the euro. So weekly, step number one, you can see we've been bearish. The bulls tried to make a move, but now it's just been sideways for the last 2 years. What do we do with ranges? We box the bottom third and top third. We don't want to trade the middle. We're kind of in that bottom third. We don't have enough information yet. We'll continue to watch in the bigger time frame. Now, in smaller time frame, We know that there's this range. Now let's use the tools. Now we have a key decision point along with the weekly. We have that one with the monthly. But what are the tools telling us? It's telling us this week the bulls have been trying, but it looks like they got rejected here yesterday, but we'll see. Now coming in, we see the fake out breakout right there. Let's go to the 3-minute. Now remember, euro is a commodity, a currency, and it trades at 820, but we had news at 830, and there we go. So overnight traders really had a nice short. So here was your fake out breakout. Remember, if we're going to be bullish, it would have done this. But look what it did. We had a decision point and a weekly, which is a key area we rejected. You wait for the break and retest. There was your trade right there. And where were your targets? 2 to 1, middle and bottom. You got a round trip yesterday. That was a beauty right there. Now, in the US session, you had to trade as well. We're in the top third. You had a rejection, momentum, break and retest, continuation. Look at that. Beautiful. So overnight traders got paid and the US session traders got paid handsomely, understanding the Trade90X earned the right to trade live, using the tools. Again, the tools tell you everything. Again, we squeeze the chart. We know that the tools, and again, we wait for those obvious trades. If we're above the previous day's range with bullish momentum, we know we're looking for continuations. If we're below the previous day's range with obvious lower high, lower lows, we're looking for bearish continuation. But if we're in a range, we're looking at the top third, bottom third, or the fake out breakouts. So we got a fake out breakout. All right, so now let's go look at Bitcoin. All right, so let's go. No different. Now Bitcoin's live right now, so let's see. All right, so again, I don't care what asset class. I don't care if you're doing penny stock. It doesn't matter to me. It's the same. So what are we looking at? Number one, what is the bigger picture in the weekly? Right now, we're moving lower left to upper right. Okay, now we're back near the highs, but we're in a range. We're sitting in a range around 59 to about 74. And what do we do with ranges? Bottom, middle, top, until we can break out. And where is another area? Here's another big decision point where price paused and took off. You can also call this one, but so we don't know yet. If we break above, we're in uncharted territories. We're on our way probably to 100,000. But if we break down, we could literally move. I'm going to put this one in too. We could at least, move down to this 50 or down to this 39,000. So again, we don't have enough information. We're basically sitting in this range. All right. So now if you're a shorter term Bitcoin trader, you know the range with the decision points. What are the tools telling us over the last week? And what is it telling us today? Remember, it's live right now. All right. So this week right here, bulls tried, but then they failed. And we're basically in this range from this 59 to, right here. And what are the tools telling you? Well, yesterday, it was basically chop. And right now, let's go to the 3-minute. So the overnight traders today had beautiful trades. You had right here, look at these right here. So you had strong momentum, break, retest. You had an inside day to bearish momentum and then a retest right here. Beautiful trades. Now, again, unfortunately, we have no control over this. I will tell you, if you take a beautiful setup and it just going sideways like this, just get out because you're just going to sit and shop. So what I usually do is you get out either with a small profit or break even, and then you just reevaluate. That's all. Now, what are we going to do with Bitcoin right now? Because Bitcoin's live. So what are we doing right? What are the setups? Well, right now we're bearish because we're below the previous day's range. So this is the setups I'd be looking for right now. If I was trading today, I'm looking for strong momentum, kind of a double top rejection off the previous day's range low to short down to this weekly target, which we hit before. Okay, I'd be looking for continuation below the weekly like this, lower high, lower low, momentum into pullback and pause for continuation. And the only way I would consider the bullish trade is if we did this. We move back into the range like this, and then I'm looking back to the middle and top. Are we clear? Good. All right, let me do one or two stocks. Let's see. Google was hot yesterday, and that's sideways. All right, that's good. So here is the semiconductor ETF that I like to trade myself personally. Again, I don't care what you're trading, futures, Forex stocks, penny stocks, crypto, it does not matter. Step number one, we can see right here. Now, also, no surprise, we're moving lower left, upper right, but look at this big rejection. Where has price paused and left quickly? Well, here and here. So these are some key decision points right here. And it looks like I said, this 24 to 30 up to 49.56 are key areas. Let's go to the 15-minute. And again, we can see this week, the bulls hit some very key levels right here. Lower left to upper right. And we had a bullish week. And now using the tools, let's go now with stocks. I'll use 1 or 2 minutes just because they don't have overnights. And again, look at the setup. Again, just using the tools. Tell me again right here. You had an inside day momentum. Look at the beauty right here. Look at that beautiful trade right there. Momentum break, retest, engulfing. Beautiful trade. You got a target up at the weekly. Target up above. I mean, look at that. Really nice. Look at even the day before. Look at that bottom third rejection engulfing right there, or the open right there. Beautiful. That was Thursday. Look at Wednesday right here. We couldn't hold the open. Beautiful rejection. Back down to previous day's range. And then also another setup right there. I mean, this had a beautiful week right here. Let me see NVIDIA. Okay, that's another really nice one. Again, NVIDIA is another one that people have been asking for. So again, I go to the weekly. What has it been doing? It's been moving lower left, upper right. It's bullish. Where are the areas that price have paused recently? Right there. We know that. And then we broke out of this range. So these are areas of interest. I'm also going to put one here now because we've had this big red candle, big green candle. All right, so go to the 15-minute. Squeeze the chart up. We have those decision points in. We know those are important. What were the tools telling us this week? We've been moving lower left to upper right. Let's go to the smaller time frame. And we can see, again, remember, previous day's high, low, midpoint, previous day's close, you're open. Beautiful. Look at that. You have the previous day's high and open right there. You have consolidation, break, and retest, engulfing. Beautiful. So, I mean, remember, all you need is one good setup a day. Again, I don't trade usually more than 6 to 8 symbols. I like to be a specialist. I always recommend that in our community. Trade the same symbols over and over. Master those symbols. Master. Again, once you master our process, again, we put you through extensive back testing and replaying. You're going to master the tools. The tools are going to help you master what bullish and bearish momentum setups are, what the range setups are, top third, bottom third, fake out breakouts when there's no edge. Okay, once you have that second nature, the numbers, risk and money management, the steps, you're going to be ahead of 99% of the traders. Again, what it takes is chart time, repetition, asking questions, proving you have a statistical edge over a body of work, then you'll be unstoppable. Okay, so let's go back and let's just recap and then let's get ready for the weekend, get back to the weekend. So let me clean this up. So again, what did we do? We went through the news. We know there's important news. We went through the earnings. We know there's important earnings. Fear and greed index, short term is still showing weakness. Based on the 50-day moving average, we're still showing weakness. The group tab right here is showing that, again, the main trend is strong. The short term is definitely trying to move back, but we're not quite there yet. The commitment of traders telling you the long term check. The long term, again, stockcharts.com is bullish. Short term is still, it's trying, but we don't have enough information. Remember, it's that indecision, but it's definitely starting to bounce. And then looking at the chart, again, we look at the monthly for the main trend, it's bullish. The weekly is still moving lower left to upper right. The daily definitely had some weakness. It did have some break and retest below the band, but now, like I said, we are sitting at kind of this indecision point. We can go either way right now. We're either going to get that break up or break down. We'll have to wait and see. And then again, using that 30-minute to 15-minute to 60-minute, we use the Trade90X earn the right to trade live one chart strategy. And again, we just went through every asset class there is. If there's another symbol you want me to go through, just hit me up at hello@trade90x.com. I'd be more than happy to review it for you. But again, this allows us, number one, to prepare for whether we're position, swing, day, or scalp. The tools quickly determine. Now, remember, I have no interest in short-term swing trades unless we're doing this. Unless you have clear bullish momentum that has higher highs, higher lows above the previous day's range, or clear lower highs, lower lows below the previous day's range, I have no interest in swing trades. Okay, anything inside the range, again, that's going to be definitely more for scalping day trading. Now, if we're only a scalper and day trading prices above and below, we're going to be looking to that as well. Because remember, scalping is we're trading seconds to minutes, day trading, minutes to hours, but we're both flat at the end of the day. So again, this helps us read the price action. Again, step number one, the weekly, looking at that bigger main trend, which is still bullish. Yes, we have a short-term pullback. We use the decision points to identify these short-term pullbacks, and we call these decision points. Step number two, anywhere from a 15-minute to 60-minute to see that shorter term. And we use the tools to learn what's been going on over the last few weeks, the last week, and then we use the tools to quickly tell us, do we have bullish, bearish momentum or range price action? And step number three, we move down to that 3-minute. Again, we do not trade into news, but the 3-minute allows us to see more structure. And then we just, again, use the tools, ask the question. We had bullish momentum, bearish momentum, range price action. As we talked about, we had choppy, no edge price action. The news came out, 8:30. And then we had the bulls tried to give us, we did get a setup right here, but again, didn't quite give us that 2-to-1 to the target. And then we failed at the weekly and really didn't do much after that. So again, any questions about, again, how we broke down the data, how we break in the top down from monthly, weekly down, and then using the Trade90X one chart strategy from anywhere, again, that 15-minute to weekly, just hit us up at hello@trade90x.com. Let's enjoy the rest of the weekend, and I'll be back with you on Monday to get started. But again, take this time to enjoy that weekend and get away from the screens. All right. See you on Monday.